Hey everyone, and welcome to our earnings cheat sheet for Friday, April 4th. It's Alexis, Garcia, and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you get through the week ahead. And Ed, earnings season kicking off, and not like much is really happening with the economy right now, is there?
Yeah, that'll be interesting. We're going to look, it'll look sort of old in ancient times to look back at the past 3 months. But I want to take a look at sales from Taiwan Semiconductor as well as JPMorgan and Delta Airlines.
All right, well, let's start with Taiwan Semi, which, as you mentioned, doesn't have earnings due for another week, but it is scheduled to release monthly sales figures on Thursday, April 10th. Sales are expected to rise 38.5% to $25.37 billion, and analysts expect Q1 earnings to climb 54.5% to $2.07 per share. And here's why we're watching Taiwan Semi. We won't really get much from sales, but we're going to be looking to the April 17th earnings report on AI smartphone processor demand, as well as any tariff or macro headwinds. And Ed, that is the big headline right now. Taiwan, which is home to Taiwan Semi, potentially looking at a 32% tariff there. So, what's on your radar with Taiwan Semi?
Yeah, a lot going on. It's really unclear what tariff, and maybe it is clear, but I don't have a full understanding. It may be that because there's going to be sectoral tariffs on semiconductors, which will probably be 25%, is that is what companies will have to pay to import Taiwan semi chips, not 32%. Nonetheless, it does show that it's going after there, and so that's an issue, and all these other parts. And it's not just that, all the other parts and components that might be imported for, but that things will go in with, for along with Taiwan semi chips. So that even if it's not related there. So there's that. And the other thing is that even before the tariffs, there was concerns about AI. I mean, there's the whole DeepSeek thing, and it just sort of like raising questions about the strength of AI. So again, it's not so much the sales or even this current earnings report. That should be strong. They should be going full bore with the NVIDIA chips. There's other chips that they're making for Apple and Broadcom. The demand is strong now. I think everybody realizes if there's any weakness, though, if there's any signs of anything, it's just like, because that shouldn't be happening anyway. It's a little bit like if you get a cold front in August, it's like, maybe this is going to be a cold winter. I mean, even if it's not just a little, like you start wearing your sweaters in August, it's like, oh, so that would be the thing on that front. So it's the combination because AI slowdown or potential slowdown. Again, that's going to be something more we look at with the earnings report. What do they say about guidance? What do they say about CapEx? Do they start cutting back a little bit, uh, on that front? So these readings that we get over the next couple of weeks on Taiwan Semi are important because it's sort of the first readings we get.
All right, Ed. Well, let's go ahead and take a look at the chart because Taiwan Semi hit an intraday high of 226.40 on January 24th. Then the stock plunged more than 14% on January 27th. And as you can see, it's really just been in a downtrend here since the beginning of the year and falling further today on April 3rd, down about 7.6%, trading below both of these key moving averages. So, what would you like to see develop with the technical action here? And what are your thoughts on this chart?
Yeah, and I think that first drop right after the high was actually the DeepSeek news. I think that's what hit all those AI stocks, and there was a brief bounce, and it's like, oh, it's not so bad, and then it's like, then it was. This one needs a lot of work. The market needs a lot of work. I mean, everything. It's not just Taiwan Semi can't do this on its own. No, no man is an island. No stock is an island. Not really, unless you're just so counter trend. The market. This needs to get above its 50-day line, its 200-day line. It needs to build the right side of a base. And as you can see, you can bounce back a little bit and then fall over. So this just seems like it needs a lot of work. When you have those kind of high volume, volatile sell-offs, and not just in this stock, but all its peers and all the market, it just may need time. So this may need substantial time. Uh, but yeah, getting above those things. But I just don't think that getting above even the 250-day line would be really sufficient. It just seems like there's probably going to be more repair time. You can see the relative strength has deteriorated considerably in the last few months. This was leading, this was doing well. It's just all turning weaker, even though again, the fundamentals look strong. These are strong fundamentals. You're not looking at that. Yes, eventually the growth was slow. Some of that's the tougher comparisons. It's not, but you can just see how hard that has fallen in the last couple of months. Just really, really severe.
Yeah, we're on the weekly chart here, Ed. Anything else jumping out to you in terms of fundamentals? As you mentioned, comparison's getting harder, but still really great earnings growth over the last few quarters.
Yeah, so it's probably gonna slow down just because of that, a little tougher comparisons. But just want to see that. And again, the sales may not be too indicative. We know it's going to be driven by AI, but it's something that we're going to be close eye on. Just what do they say about the future? That's really going to come with the earnings report. But the sales are a first indication of that.
All right, Ed. Well, let's move on and take a look at JPMorgan Chase, which is scheduled to report Q1 earnings on Friday, April 11th. Earnings are expected to rise 4% to 463 per share, and revenue is seen climbing 5% to $43.92 billion. And here's why we're watching JPMorgan. We'll be paying attention to commentary on consumer spending and corporate lending data, and we'll also want to see if there's been a boost in the commercial investment banking segments. And Ed, we talk about bellwethers here. One of the leading financial stocks here leading off earnings season. The bank returned to growth mode during the fourth quarter when results were helped by better than expected net interest income. But as you know, there's plenty of uncertainty right now. And, it'll be interesting to see the commentary here with JP Morgan. So, what are your thoughts?
I think it really is about the commentary. I mean, there might be they might say, "Hey, near the end of the quarter, we heard this and this." It'll be more like chatter that companies weren't doing this, they weren't doing that. Like maybe M&A activity was drying up. There does seem like there was some capital market stuff. So some of the things on the Wall Street stuff is that, but it's going to be more the indications. We saw signs of consumer lending doing this. We saw business loan demand. We saw this and that. All these kind of things. This sort of their and maybe they're kind of how they're trying to navigate things. It's just going to be tough because it's really so early. We just are getting the tariffs. There's even the concern that maybe even Europe could say, we're going to go after the financial services. They might go after tech giants, but they also might go after, say, financial services in various ways. It's not exactly clear how that would happen. But those are things that could be done to make business more difficult for global banks. So again, it's going to be a lot that commentary because the numbers will be the numbers. They won't be really that affected by tariffs. It's just the real question of can we get, what are they thinking going forward?
And Ed, let's take a look at the chart. We're on the daily here. And again, just a lot of damage to these charts. We had a 280.25 high here back in February. That has since rolled over and was trying to hold the 200-day line here, but is now trading below that level. Um, Again, lots of damage to a lot of charts out there. What are your thoughts here?
Now, this relative strength line hasn't fallen apart like others, but again, in a bad market, absolute relative strength can be absolute losers. And this isn't, we've seen stronger relative strength lines. Don't question. There's some that are surging to new highs. Obviously, somebody's surging to new highs in relative strength, but it's just so difficult. You could see how much it's dropped on the actual chart. It tried to bounce back, but then it's sold off again. We just don't know. But this is, this relies on the strength of the economy for things. It relies on that and deal making other things. It just right now everything seems frozen. Now they might say, no, we think it's going to calm down. Like they might say some very positive things. We just don't know about that. But yeah, it's fighting for the 200-day line. It's obviously below it here. Can it get back above it? That would be a nice thing to see. Has to get back above the 50-day line, maybe then calm down. It's not as damaged as Taiwan Semi, but still has damage. And I think another thing is that banks, I think if you go to a weekly, I mean, we may need to go to a monthly, but on a weekly, you can see this has gone on a nice run for like 3 years. But if you go back to, and like in the relative strength line, generally outperformed. And that's sort of unusual. There's various things about the Fed cuts, there's other things, but going a monthly, you can see there was a long stretch where the relative strength line was essentially going sideways. So it's unusual to have the banks outperform as long as they have. If the economy seems like it's going to go through a tougher spot. It doesn't mean it's going to go into recession, but it looks like there's going to be some uncertainty. So that could just make it difficult for something that is fairly economic reliant to really outperform, in the near future. But that's what we want to see. Again, I think people will really pay attention to these earnings and the earnings commentary in a way that we often don't.
Now, that's a really great insight, Ed. And let's go ahead and move on to Delta Airlines, which reports earnings on Wednesday, April 9th. The airliner is expected to see Q1 earnings decline slightly by 2% to 44 cents per share. And analysts expect revenue to climb 4% to $13.07 billion. And here's why we're watching Delta. We'll be looking for information on consumer and corporate sentiment, as well as the international travel outlook with Canada and Europe. And again, we talked about financials here, but this one could give some interesting commentary about where the consumer is. And a lot of airline stocks have hit turbulence in Q1, and Q2 looks to be bumpy as well, with summer pressure coming in demand here. So, what's on your radar with Delta Airlines?
Yeah, Delta and a few other carriers warned a few weeks ago, so we sort of have a pretty good idea how Q1 will go. It'll be not great, but we'll sort of know what it is. Again, it'll be the outlook that's going to be so important. And the travel stocks have really fallen apart. It was interesting even before. It does feel like the moment the tariff news came in, it really hit a lot of these things, even though you might have thought, well, why is it really going to hit? Well, it hits one way or the other, this disruptions. Now it seems like there seems to be almost like I saw stats at one point. I don't know what period it was, but like Canadian bookings to the US down 70%. I'm sure US bookings, and there's all sorts of things that are going to go on. So there could be a real drop in tourism, business travel. I mean, government travel had fallen maybe because of Doge, the Dodge, kind of cuts that, that was under the microscope. Business spending is maybe down as everybody just tries to deal making comes down. Everybody just tries to cut expenses. So it just seems like a really ugly environment for travel stocks right now in general, both on the consumer and the business side. I think when the business stuff and the government stuff comes off, because that's higher price, they're taking the pricier seats than maybe I might, where I'm going to take the tiny leg room and just be in the cattle car. So again, this is just a sign, another like with JPMorgan, indicator of consumer spending, an indicator of those kind of and business as well. I think we're all looking for any kind of hints because what is happening today or last week is so different from what we had a month ago, or at least we think it is. Maybe it's not, but we want to know. We don't know.
Well, Ed, you'll always be first class to me, but let's take a look at this chart. We're on the weekly here. And as you mentioned, I mean, airline stocks were on a roll coming into the year. This was trading near highs in February, and then we can see sharply pulled back, I guess would be a polite way to say it, but it is trading well below that 40-week moving average. And we can see the relative strength also taking a dive. So again, lots of damage to these charts. What are you looking for and hopefully want to see as these repair?
This has a lot of repair work. And the problem is airlines just seem to, they go on these runs, but then they give them back. They give a lot of them back. And it just seems like fuel costs or there's labor or there's other things. Something always seems to interrupt big long runs for the carriers. So we'll see how things go, but it just needs a lot. That's basically straight down. I mean, that's really, really down a lot. That's basically it's almost 45% down in just a couple of months. So I think it's going to be months before this would look really attractive. And maybe it just all turns around, but it would be so odd to come straight back up. I mean, it'd be such a V formation. I think you're talking months, even if things start to improve. But I think, it's probably, again, we're going to be downsizing expectations. Some of that has already happened. I mean, obviously the market has sold off a lot, anticipating a weaker outlook, but it just seems like, they might come out and lower expectations and going forward. So a lot of repair work probably for this name.
All right, Ed. Well, those were some of the bigger names on our radar as we kick off earnings season. But we have a few more here, starting with Wells Fargo, which also reports on Friday, April 11th. And again, we can see on the weekly here in consolidation. This is kind of looking a lot like JPMorgan here, but really struggling the last couple weeks and trading below that 40-week line. So, what are your thoughts here?
Yeah, and while it did sort of did well like JP Morgan, I don't think it's had the outperformance for years the quite same way. It's struggling, but yeah, it needs to bounce back. We'll see. All the commentary, it's going to be on that same day. So all the things JP Morgan says, we're going to want to hear about Wells Fargo. I think JP Morgan is a little more Wall Street centric, but they both have their feet in a lot of things. So they're going to, that's what we want to find out in it. But they look damaged, but it's really, I think the commentary we're going to hear about the economy and businesses and consumers more than what we think about for the stock.
All right, let's take a look at BlackRock, which also reports on April 11th. And again, uh, this one pulling back, technically in consolidation, but well below that 40-week line. And again, I think it's all going to be about that commentary, right, Ed?
Yeah, and that's all, one reason they're also getting hit because there are a lot of the Bitcoin inflows because they run the IBIT ETF, which is one of the most or the most popular Bitcoin ETF, and so there's that. Yeah, that's their commentary. It needs to bounce back quite a bit, and we'll just have to see what they have to say as well.
All right, well, let's wrap up with, the egg market is so important right now. Cal-Maine Foods, they report their Q3 fiscal earnings on April 8th. And, this one again was looking really strong and then really sharply pulled back over the last couple months, trying to rebound here over the last few weeks. Looks like that 10-week line would be the next point to retake. But what are your thoughts here?
I get nervous holding an egg, these egg stocks because I don't know when I don't know when it's going to crack. It'll have these things because if Cal-Maine gets hit by bird flu, then they would be bad for them. But if rivals do, then the egg prices skyrocket. And there was a lot of culling because there's a lot of bird flu, and they probably got dragged on. And finally, the government said, "Okay, we got to cull them," and that really sent prices up skyrocketing again. But they're going to come right back down. It doesn't take too many longs to get egg-laying chicks. It's not like cattle or pigs where it's like you're talking about years. So those things can swing up and down, and yeah, the profits are going to be absolutely enormous. But what will they say about, a couple of quarters from now? I mean, we know that the wholesale prices are plunging. There's just so many variables on those things. So, is this finally going to be the end? You can just look at those on the annual numbers. The annual numbers have tremendous rises and falls. It just makes it very difficult. Everyone's like, oh, I just have eggs for breakfast. It's just normal. It's so constant. But unlike other food producers, eggs, because of the bird flu issue, is just has enormous swings.
All right, Ed. Well, that wraps it up for this episode of Earnings Cheat Sheet. Thank you for your commentary as always. If you want even more market analysis, be sure to tune in to Stock Market Today with Alyssa Coram. That goes live after the closing bell, and we'll see you all back here next week.